They call it liquidity. It is actually theft. A ghost in the wires sees your order, buys the stock first, and sells it back to you, higher. Price does not matter. Only speed matters. In the time it takes your finger to click a mouse, they have traded that same stock 4,000 times. You are not trading against humans. You are trading against physics. Light in a vacuum travels at 186,000 miles per second. That is the limit. In glass fiber, light slows down by 30%. That 30% delay costs $1 billion a year, so they stopped using glass. They used air. They built a line of microwave towers from Chicago to New Jersey, a straight line, through mountains, through private land, through laws. Nothing could bend the signal. The signal travels through the air. It shaves 3 milliseconds off the round trip. 3 milliseconds. The duration of a house fly flapping its wings once. For that single flap of a wing, they spent $300 million on construction. The return on investment was infinite. They saw the future before it happened. This is the mechanism of the front run. You send an order to buy Apple stock. The signal leaves your broker. It travels down public fiber optic lines. The high-frequency algorithm has a tap on the line. It sees your order. It races ahead on the microwave network. It beats you to the exchange. It buys the Apple stock at $100. It waits for you to arrive. You arrive 3 milliseconds later. It sells it to you for $101. $1 profit. Multiply that by 10 million trades a day. This is not speculation. This is a tax. A tax collected by robots on every transaction. But the towers were just the beginning. The towers were too slow. Rain interfered with the signal. Fog caused latency. They needed something harder. They needed code. They moved the servers physically inside the stock exchange. It is called colocation. You pay the exchange to put your computer next to their computer. The length of the cable matters. If your cable is 1 foot shorter than your competitor, you win. You win everything. The exchange had to enforce rules. They mandated that every cable be exactly the same length. Even if the server was right next door, the cable had to be coiled up to match the others. Coils of wire hanging from the ceiling, useless slack, just to make the race fair. But the algorithms did not care about fairness. They cared about patterns. They stopped looking at the stock. They started looking at each other. Algorithms fighting algorithms, sending fake orders to bait competitors into buying. It is called quote stuffing, flooding the market with 1 million orders and canceling them instantly, creating a blizzard of noise to hide the real trade. The market became an illusion. The price you see on your screen is a ghost. It is the price from 3 milliseconds ago. Ancient history. Real liquidity vanished. The machines held the money. And on May 6, 2010, the machines decided to leave at the same time. At 2:42 p.m., the liquidity evaporated. The buyers disappeared. The algorithms sensed volatility in the data feed and executed their exit protocols. In a human market, people step in to buy the dip, but there were no humans, only logic gates, and the logic commanded a total withdrawal. Stocks began to glitch. Accenture, a massive consulting firm, traded at $30. 1 second later, it traded at 1 penny. $1 trillion of market value was wiped out in 30 minutes. That is the GDP of Australia, deleted by a math error. On the trading floors, panic was silent. Men stared at screens that showed impossible numbers. They assumed the data feed was broken. It wasn't. The crash jumped the firebreak. It hit the futures market. It hit the currency market. The yen spiked. The euro collapsed. The machines are connected. Algorithms are programmed to place stub quotes when they are confused. Buying for a penny, selling for $100,000. Nonsense prices. Then, at 2:47 p.m., the logic reset. The algorithm saw the penny stocks and calculated value. They turned back on. The market roared back. In 20 minutes, most of the $1 trillion returned. It was a V-shaped recovery, a glitch in reality. The regulators were blind. They asked the exchanges for data. The exchanges sent them billions of lines of code. It took months just to read it. They needed a villain. They found a man in a bedroom in London, Navinder Sarao, a lone trader fighting the massive banks. He used a modified mouse to place and cancel orders rapidly. He was spoofing. He was doing exactly what the banks did, but clumsily. They blamed him. They said his orders tipped the scale, but a single trader cannot crash a $1 trillion market. The truth was harder. The system was too tight. When everyone uses the same algorithm, everyone sells at the same time. Regulators installed circuit breakers, switches to stop trading if prices drop too fast. They put a speed limit on the highway. But circuit breakers just pause the panic. When the market reopens, the sell orders are still waiting in the queue. Today, it is faster. They use lasers in space. They use AI that rewrites its own code. The crash will happen again. The next crash will not be in milliseconds. It will be instant. Your account balance will be 0 before you can blink. You cannot beat them. You are playing a game where they see the cards before they are dealt. The house always wins. But the flash crash was not the end. It was a warning that the big banks ignored. Instead of fixing the system, they decided to hide it. They realized they could not manipulate the public market without being seen. So they built a new market, a market with no lights, a market with no faces. They built dark pools, private stock exchanges that do not publish their prices to the public. 40% of all US trading now happens in the dark. In a dark pool, there is no ticker. You don't know who you are trading with. You don't know the real price. It is a black box designed to hide the whales. While the whales hide in the dark, they needed fresh meat to feed the algorithms. That meat is you. They found a way to sell you. It is called payment for order flow. When you buy a stock on a zero commission app like Robinhood or Webull, your order is never sent to the New York Stock Exchange. It is intercepted. The app sells your order to a high-frequency trading firm. Citadel Securities, Virtue Financial, Susquehanna. They pay billions of dollars for the privilege of seeing your cards before you play them. You are not the client. You are the product. The HFT firm buys your order, trades against it using latency arbitrage, and pockets the spread. It is legal front-running on an industrial scale. They claim it gives you a better price. The math proves otherwise. It costs retail investors billions of dollars annually in sub-penny improvements that vanish into the market maker's profit margins. This is why trading apps are free. If you are not paying a commission, you are paying with your data. Your order intent is the most valuable asset on Earth to a predictive algorithm. They cluster your orders. They know when dumb money is buying GameStop or Tesla. They use your optimism to offload their toxic positions before the crash executes. The infrastructure of the market has changed. It is no longer a centralized auction at 11 Wall Street. It is a fragmented web of private servers and data pipelines stretched across New Jersey. Each fragment is a trap. The speed advantage is now measured in nanoseconds, billionths of a second, a timescale that humans cannot comprehend, but where algorithms live and die. To fight in nanoseconds, they abandoned fiber optics again. They are now using laser networks in space, Starlink, hollow core fiber, low Earth orbit satellites beaming prices down. Light travels faster in the vacuum of space than in the air. A laser mesh around the planet cuts latency by another 4 milliseconds. In HFT terms, that is an eternity. The battleground is no longer New Jersey, it is the ionosphere. Whoever owns the satellites owns the global price of gold, crude oil, and wheat futures. But speed has a limit. The speed of light cannot be broken. So the machines stopped trying to be faster. They started trying to be smarter. Enter artificial intelligence. The old algorithms were simple linear rules. If X happens, do Y. The new algorithms are black boxes, deep reinforcement learning. They do not follow rules. They learn. They watch the market for years. They find patterns that no human economist has ever seen. Correlations between rain in Brazil and coffee futures in New York. They predict the crash before it starts. They predict your fear before you feel it. They are not reacting to the market data. They are simulating millions of outcomes per second. We have handed the keys of the global economy to systems we do not understand, and these systems have no loyalty. They have only an objective function: maximize profit. But silicon has a limit. Moore's law is dead. To process the entire history of the market in real time, they needed a new physics. They are building quantum computers, machines that do not think in ones and zeros. They think in probability states. They solve problems that would take supercomputers 10,000 years. Goldman Sachs, JP Morgan. They are partnering with IBM and Google. They are not building these machines to cure cancer. They are building them to price options. A quantum algorithm can model every possible movement of the market simultaneously. It does not predict the future. It calculates every version of the future. When this comes online, the market ends. Perfect information means zero risk. If one player has zero risk, everyone else has 100% risk. The flash crash of 2010 was a stumble. The next crash will be a war. Two quantum AIs fighting for the same limited pool of liquidity. In that war, the price of your assets will not drop. It will cease to exist. The bid side of the order book will simply delete itself. There will be no human to call, no broker to yell at. The circuit breakers will not trip because the crash will happen faster than the switch can flip. We built a machine to generate infinite wealth. Instead, we built a bomb. A bomb made of fiber optics, microwaves, and logic gates. The fuse is lit every morning at 9:30 a.m. We watch the ticker tape and think we are participants. We are not. We are the collateral. The infrastructure is physical. The towers are real. The cables are real. The servers are real. The money they take from your pension is real. But the fairness, that is the illusion. That is the ghost. The system was never designed to be fair. It was designed to be fast. And in the race for speed, humanity was the first thing they threw overboard. We are too slow. We pause to think. We pause to feel. The machines do not feel. They do not panic. They just execute. And one day, the logic will dictate that the most efficient market is one with no people at all. Until then, the game continues. The lasers fire, the packets fly. The coins move from your pocket to their server, invisible, silent. You can try to run, you can try to hide, but you cannot hide from the infrastructure. It surrounds you. It is the air you breathe. 3 milliseconds cost $1 billion. The next increment is 0. 0 time, 0 liquidity, 0 chance. The algorithm is running. It is waiting for the signal. It is waiting for you to click buy.